Hello friends, it's October 3rd on the calendar, and this is the weekly review of instruments on the financial markets, the main ones. Without further delay, let's move on to oil. As always, we start with oil. Oil has dropped, fallen below its previous lows, and for now, there are absolutely no signs of longs here at all. On the plus side, volumes appeared in the area where they were supposed to, but on Wednesday, we pushed through this liquidity cluster. So what now? Well, the bots have gone short, but honestly, I don't like that. Unlike the bots, let's say on dollars and rubles, or even the Chinese yuan, which actually did really well this past week. With oil, it's still quite debatable. My personal opinion here remains precisely the same. There's a noticeable short-term divergence that has been forming since August, but I still don't really know. For now, I'm not particularly in favor of taking any long positions. I haven't manually entered any short positions myself. In my considered view, the exit was indeed good and quite solid, but this is the dynamic market, and not absolutely everything follows strict technical analysis. So I currently have a stop order meticulously set. Maybe I should consider moving it a little bit lower to Thursday's significant high. I'll be diligently watching for a potential return to this specific liquidity zone. If we don't manage to go above 66, I won't be shorting just yet because I genuinely don't see any purely technical reasons for initiating a short, as I've already explicitly mentioned. On the broader weekly chart, in my professional opinion, the decline is definitively over here, and now we'll patiently see how things ultimately play out. I don't know, yeah, so I'm staying out of any positions. As for gas, I have an alert set at today's minimum, maybe even, by the way, I might get an entry for the evening session on gas, because this breakout, in my personal opinion, is a classic false breakout, like a really obvious one. Plus, on the next candle after the false breakout, there was a huge volume, which also confirms that it was indeed a false move. So, potentially, I'll be looking to go long on gas, maybe even right after I finish recording this review, if the minimum holds. As for silver and gold, nothing new, just shooting off into space. The rally continues, nothing to add, there's no reversal signal, and I have no position. Same with gold, I don't even see any point in dwelling on it, because we've never seen prices like this before, and trying to predict a reversal just for the sake of it, well, I won't do that, yeah. So I'm just watching and waiting, kind of like with the S&P, for some kind of significant reversal for short-term trades. For long-term positions, if you have long-term holdings as a strategic hedge, say approximately 5 to 10% in gold or silver, you should definitely keep them. Don't get jumpy or overly concerned. Right now, we're talking exclusively about speculation, and in my personal opinion, there's absolutely nothing substantial to speculate on here at this moment. Of course, let's now move on to the euro-dollar. Here, there are some notable changes specifically regarding the stop-loss level. As you remember, I went short right here at these particular levels, and in the last review, I clearly stated that I moved my stop to here, but not yet to this specific point. I recommended you set your stop at 1.17 something, which would have already closed your position if you had indeed moved it. I kept my stop here, but today I moved it to 1.177, just like this. Why did I do this? Because after this significant drop, 1, 2, ABC, we should logically keep falling further. At most, we might update this high at 1.176 and some change, but after that, we should definitely keep declining. If there's a new high here, then with a very high probability, we'll also update 1.182. And what's the actual point of staying in the position if you can simply re-enter later at a more favorable price? So I'm still holding my short positions, sticking to the same line of thinking and overall position on the euro-dollar. The short is still very much on. I've moved the stop to break even with a small profit, maybe around 35 points or so. The probability of getting stopped out is, let's say, quite high. I'd put it that way. Again, if it goes to 1.185 or so, I'll be actively looking for another entry point. As for the DXY, absolutely nothing has really changed since the last comprehensive review. Where were we exactly? Here it is. We've dropped a little bit, but not much at all, still remaining at the same crucial level, 97.5, which is a strong and important level, clearly marked in burgundy. Where we go from here will be extremely interesting to observe because Wednesday closed bullish, Thursday confirmed the long position, and Friday is so far neither at the high nor the low. Thursday didn't break out, so it's neither positive nor, well, neutral. Moving on. By the way, I'll talk about my positions in the American market today. For those who've been waiting a long time, since there's really not much to trade in the Russian market right now, we'll take a look at Surrogate maybe. There isn't much news from the American market either. New highs. That's it. I'm waiting. Here's the S&P at the top of the channel at resistance. But for now, there are absolutely no technical reasons for a significant reversal yet. But this particular area is already a very strong resistance zone. As for the Nasdaq index, we actually broke out of it a considerable time ago, perhaps 3 or even 4 weeks back in time. There's no real compelling reason for a substantial pullback, of course, not at this moment. Now, let's take a closer look at what's currently happening with Bitcoin. This new unexpected high really shouldn't have happened at all. There was supposed to be a clear double top formation, and it's still technically in play, but it is now under very serious doubt. This previously anticipated double top that was clearly visible there. Because, first and foremost, if you can recall, I distinctly said that by the very end of September we should have definitely hit 100,000. That was my precise forecast, literally stated just like that, and at 100,000. But we didn't actually fall all the way down to 100,000. And instead we turned around quite sharply, and it genuinely looks like we don't plan to stop our upward movement. But honestly speaking, that doesn't really interest me all that much. Because my fundamental thoughts remain precisely the same regarding a potential pullback. Well, regarding a much deeper correction than that insignificant nonsense we observed on the weekly chart. So, what exactly is next for us? They keep persistently dragging Bitcoin further and further up. Well, that's just great. My overall view basically stays exactly the same. I still think we should definitely see a significant correction coming soon. But you know, right, this is truly the market. Who really cares what I personally think? I'm just expressing my own humble opinion here. The market ultimately shows us exactly how things will actually turn out in the long run, so we will definitely keep watching very closely. The significant high hasn't been taken out yet, so the potential double top formation is still technically very much in play. That particular high is precisely at 124.5, and even above that level, so it's still considered quite valid. But if we do decisively break through it, then we can completely cross out that entire idea and begin to look for something else entirely. The very same goes for gold, silver, and the S&P. We're constantly looking for clear reversals and optimal entry points, but I will certainly be looking for some excellent ideas there. That's absolutely it for now. Let's wrap this up. Texas Instruments, also known as TXN, is currently short. So, for example, Booking Holdings Inc. is another company. Look what I've dug up here. There's a kind of lopsided head and shoulders pattern here. It looks like this. Do you like it or not? Let me know in the comments. I don't know, maybe $5,000 is a lot for some people, but I went in. So, that's the idea I've got here. We've kind of knocked out the base here, and technically we haven't broken it, but I really like the structure itself. There's a divergence here. Pay attention to this, yes. There's a divergence on the weekly chart. A good one? Look very closely, right exactly here. Plus, there are a bunch of technical points. I won't explain them all right now, but it would take way too long to explain everything, but overall, I think I like this setup the most so far out of all of them. Out of all the various and diverse positions that we are currently considering, so the stop loss point here, I truly think absolutely shouldn't be any higher than the current week's highest recorded point. If you specifically need precise numbers, please allow me to provide them for your careful consideration. 5,588. But the ultimate target price here is 4,800, and I must emphasize, this is a very basic, indeed, a fundamentally basic and truly basic level of analysis. So what else is there to consider in this particular scenario? Well, there's Chevron, which presents a significant opportunity, and there's also the strategic play on the continuously falling oil prices, which could be quite profitable. Well, not exactly for falling oil prices, of course. There are other factors at play here. Here, my target is the lower boundary at 139.5. I spent a long time mulling this over, analyzing every reversal here, and came to the conclusion that it could be a good trade. Plus, look at what a nice Thursday we had. Friday confirms it, and it seems like there could be some momentum building. That's why I didn't mention the reason in detail, because this is probably the weakest short position I have right now. So you can skip this story if you want. The target here isn't that far. It's the lower boundary of this channel and this support level. Let me draw it out. This is a really strong consolidation area. Even the basic target, even just up to here, 160. And the potential is to reach the lower boundary. Not all the way down, but around 147. So these are the three positions. I've marked the ones I have on the American market. Friends, that's all from me for today. Don't worry about the Russian market. You should always have a plan why you bought what you bought. This doesn't just apply to the Russian market, but to investments in general. If you don't know why you bought an apartment, why you diversified into America or Kazakhstan or the UAE, what share you allocated, when you have all this sorted out in your head, you won't be nervous. And any market downturn will only be a pleasure and a positive for you, because you know that with your next deposit, you'll buy a reliable asset, ideally one that pays dividends at an even lower price. On that note, I wish everyone a great weekend, a wonderful mood. Take care of yourselves. Goodbye.